Hello and welcome to our weekly look ahead at the markets. And over the last week we've seen a bit of a chop, the S&P 500 moving broadly sideways. We're seeing it run into that sort of resistance area around the February highs at 41.50. Last week also saw the VIXX hit its weakest since November 21, and we saw bond yields about a month high. So there was some movement last week, but it was kind of sideways, it was kind of crabbing, it was kind of looking for direction. I think we're going to be looking for that direction over the next fortnight. So we've got a key fortnight of earnings coming up in terms of the US market in particular. Looking ahead this week, we've got about 1/3 of Dow components reporting, a fair chunk of the S&P 500. And among them are the big tech names, so Microsoft, Alphabet, Amazon, and Meta among those reporting in the coming days. Now, these are important. We did see slowdown in cloud growth at the likes of Amazon and Microsoft, also digital advertising slowing at the likes of Meta and Alphabet. And the key thing that we'll be looking for this week, I think probably in terms of Alphabet and Meta in particular, will be the AI side of things, looking really at how much emphasis they're placing on AI at the moment, in particular Meta, as it shifts away from the metaverse and into AI, at least in the short term. We think that they're going to be putting a lot of focus on that area of the business. So keep an eye out for that one. That could have some market impact with these big tech names accounting for a fair chunk of the S&P 500. Elsewhere in the macro space, we're looking at Bank of Japan, its first meeting with new Governor Ueda. And he's been sort of suggesting that probably they're going to be keeping things as, no change, if you like, in terms of monetary policy, but we're looking to see if there's any tweaks in terms of the guidance, in terms of the sort of language that's being used about trimming yield curve control, maybe normalising policy in due course. So key Bank of Japan meeting coming up, and that will have important ramifications for FX markets, particularly, of course, the yen, but that will have a broader read across as well. As we saw last week when we saw UK inflation hitting levels that we weren't expecting, it remained in double digits, 10.1% in March, down from 10.4%, but still ahead of the 9.8% that had been expected. That double-digit inflation, plus maybe some slightly hawkish commentary from some Fed officials and from the ECB minutes, that suggested perhaps that we're going to see higher inflation, therefore higher interest rates. And so that led to sovereign bond yields hitting 1 month highs last week, and so that's gonna be something to bear in mind with that Bank of Japan meeting. If they do sound a bit hawkish, if there is any kind of nod towards trimming or at least pulling back on yield curve control, then that would have broader ramifications for global bond markets. Also keeping an eye out on the US debt ceiling chatter, what's happening in Congress with regards to that. JP Morgan last week saying a non-trivial chance of default. So the US heading on its usual sort of standoff, or at least usual customary standoff that we see every few years between Republicans and Democrats over that debt ceiling. That will have important ramifications for the wider market. I think probably into August, by the time a potential shutdown. I think we could start to see some tensions in May, but August before any kind of shutdown seems to be likely. But that will drag on market sentiment, and although the chances of default are very slim, it will nonetheless weigh. And I think one of the key things that we'll be looking at is the amount of austerity that any shutdown or debt ceiling wrangling might produce. So austerity as in lower government spending, and that might have an impact on the US economy going forward, and that therefore might have an impact on the Fed and what the Fed's looking at in terms of rate hikes coming down the line. And in terms of the Fed this week, it's a blackout period ahead of the May 3rd, 4th meeting, so we won't be hearing from any Fed officials over the next week and a half, so that's probably good news for most of us. That's it for now. Thanks for watching.